The following is a presentation of TFNN. The Trader's Edge with Steve Rhodes. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. The Trader's Edge. Now, Steve Rhodes.
Good afternoon from TFNN. Welcome to the February 26th, the terrific Tuesday edition of today's Trader's Edge Show. I'm your host, Stevie Perseverance Rhodes, who absolutely knows that each of us should always be pioneers of our future versus prisoners of our past. Hope everyone out there is having a great day. Let's have an extraordinary one. And, of course, the easiest way to do that, it's to always remember that life is happening for us, not to us. That's right. When you and I make that one little 2x4 shift, it means we can find the gift in every set of circumstance that life is going to toss at us. Today, you and I, we're going to go check out the circumstance of these markets. We're going to go figure out what the bulls and the bears, what the buyers and the sellers are communicating to you and I just past 1 o'clock in the afternoon. I want you to know that I'm absolutely grateful for your presence here, but more importantly, I'm here to serve you. So feel free to pick up that phone, dial on in 877-927-6648. If you can't dial in, let those fingers do the walking. You can always send me an email, steve@tfnn.com, inside the subject heading, if you'd be kind enough to put radio show question. Of course, in the Tiger's Den, well, any ping will do. So let's go ahead and get this show started on terrific Tuesday. Of course, this is Tiger Financial News Network. I'm Steve Rhodes. Welcome to Lush Show. Right now, the Dow trading down 15 points. 26,075 is the print. S&P's off 2, NASDAQ down 4, Russell's off 8 points. Semis are the ones leading the charge on the way down, so to speak. Off 0.75%. That's about 11 points to the downside. Trannies are to the upside. You've got gold off $1, silver is flat, and light sweet crude is flat as well. Let's start with light sweet crude, only from the standpoint that yesterday we had 2 or 3 request callers with regard to light sweet crude, and what we noticed yesterday was that the bar color, let me just go ahead and come right to the daily chart. We noticed that yesterday the bar color was orange. You'll see that if you're watching us on TigerTV. Otherwise, you're just seeing green and red bars out here. This is one way of utilizing the one aspect of the TAS market profile system. And here, when the bars turn orange, it just is a leading indicator that the market's trying to find a new profile. What's that mean? It's trying to find new levels of support and resistance out here. And so for those that are short or long, doesn't matter, what you've got is new information. Now, the profile itself, the structure of it is equally balanced. In other words, the center is pretty close to the center of the top and the low. Well, the top out here, resistance, 57.81. Support, and everybody that was calling yesterday was short light sweet crude. And we said, hey, you know, if light sweet crude closes underneath the top of that box, that was 55.61, it's okay to stay short. But the caveat was there's a new profile that's forming, and I don't know what it's going to look like. Well, we now know what it looks like. And so here support is 55.23. The actual low of the day is 55.02. We're trading right now just slightly above that. I don't know where the day ends. This doesn't say you have to get out. This would say you would get out of your short position if you saw a close over 57.81, the top of that profile. Doesn't mean it'd be right, but that's what it would be communicating to us. There's nothing bearish about this chart other than, and I heard Tommy mention it, yesterday's candle session. And he's absolutely right if we take a look at light sweet crude, because that is a bearish candle out there. So it is something to pay attention to. But right now, what you want to do, if you are an intraday trader with regard to light sweet crude, you need to be watching 55.23 like a hawk. You want to see price close under that level today. If it doesn't happen, 56.52 is the likely next move, maybe even the top of that box at 57.81 out there. So that's what I see when I take a look at light sweet crude. Somebody had also called about natural gas. I don't recall if natural gas did not have a orange bar, and that still continues to look bullish, even though it's off of its highs of the day so far. Okay, so let's go to. There's a question here posted inside the Tiger's Den that says SR with the S&P daily chart forming a seventh wave move. Any idea you have why selling will hit? Why it will hit? I don't know. I don't know what would be behind it necessarily. In other words, one thing that could be behind it would be some wild currency swings. I don't have it posted really right now for the S&P, but for the Dow, if we really want to understand, Z, where the big money is, the big money. So the big money takes a look at the Dow. They say, hey, the Dow is a trophy horse. They say the S&P 500, that's just kind of like for the U.S. portfolios, money managers out there. They're primarily taking a look at the S&P 500. The NASDAQ, that's really for the retail type traders, think FANG and so forth. That's just a general overview, but it's really the Dow here. And this is, we're looking at the Dow, and yesterday the Dow priced in euros, very close to getting up towards its all-time high at 23,254. That's the Dow priced in euros out there. Yesterday was a test of the swing point out here from the November time frame in the Dow priced in euros. It's just basically pulling back slightly out here. Never know the reason. What Mr. Z is referring to. Now here's the. Is it okay if I just stick with the Dow? I'll go over and take a look at the S&P 500 in a moment, just because I have the Dow up on my screen out here. If the question is, why did the market stop where it stopped so far today? All we really have to look at, and really we will better see it when I go over and take a look at the Dow equity futures contract, because we're dealing with more data. More data is better out here. What we can see is what price has not done today inside the Dow. It has not closed below, even really tested the 25,930 level out there. 25,930 happens to be Stevie's green line. That's a level of support that must be broken. Anything that pulls back there and holds there and closes above that at the end of the day means that during the day was nothing more than a test of support out here. Now, we do have that nice 9 count that occurred yesterday, and we do have a nice little shooting star, so you've got a bearish reversal signal. Don't mean a thing if it ain't got that swing, and that swing would need to be, from the bearish side, a close below support. Now, if we really go take a look at support out here, and we'll go back, we'll take a look at the S&P 500. If you ask a question, I like to answer it as much as I can. But if you take a look, here is the Dow equity futures contract. Now, it's different than the Dow cash indice. The Dow cash indice, we got to count number 9. In the equity futures contract, not so fast. The equity futures contract, we're only in wave number 4. But I'm sure that Basil covered that during the last hour. What he didn't cover, though, was where did price find support this morning? Where price found support was right at Stevie's green line. If you're watching us on TigerTV, you can see how well and how important this specific tool is to let you know whether it's just a garden variety retracement or there's something more to it. So what is it that's going to go ahead and cause the selling? What's going to start selling right now? I don't know what that event might be. And we've made it through the Fed speak out here, right, in front of his testimony in front of Congress. I don't know what would actually start it. When we get back from this breakout here, we'll go take a look at the S&P 500 specifically. That way I can at least give you Stevie's green line number, the Green Hornet. Steve Rhodes with TFNN. We'll be right back.
The TAS Profile Scanner is the most revolutionary piece of trading software that you will ever try. Wouldn't you like to approach the markets with confidence? As you begin your trading day, it's likely that you'll be faced with lots of decisions. In order to make the best decision, the first thing you'll need is a strategy that will help you minimize your risks. Whether we're in a bull or bear market, a good strategy is to have the tools needed to help you scan and analyze the markets before you trade. The TAS Profile Scanner instantly scans and filters over 2,500 global financial markets, such as stocks, ETFs, commodity futures, and Forex. Headed by Steve Dahl, president of TAS Market Profile, the TAS Profile Scanner understands that in today's technological world, the use of top-flight software applications, automated trading algorithms, and technical analysis expertise is essential to successful trading in today's market. Whether you're looking at the trade matrix, the ETF heat grid, the market breadth, the landscape charts, or the many other features of the TAS Profile Scanner, this is a piece of software that will revolutionize how you look at the markets and set up your trades. The team at TAS has even put together a 12-part video series to walk you through every aspect of the TAS Profile Scanner, which you can find directly on the TAS order page at TFNN.com. Sign up now for only $97 a month with a risk-free 30-day trial, so you have nothing to lose and everything to gain. See for yourself how you can harness the full power of the TAS Profile Scanner by visiting the front page of TFNN.com today, and you'll find the TAS Profile Scanner under the Services section. Remember, with a 30-day money-back guarantee, you have nothing to lose. Don't let another day pass you by without trying out this amazing piece of software that will revolutionize how you look at the market and how you place trades. Sign up today.
Many of our new listeners have heard about the Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive the Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on the Tiger's Den are on the front page of TFNN.com.
TFNN has launched our brand new website. You can still visit us at the same TFNN.com URL, but when you do, you'll see a new and improved homepage with a much simpler navigation, whether you're watching TigerTV live in high definition or just accessing your newsletter subscriptions. We even have new pricing in 6 months and yearly options. Check out the new TFNN.com now and experience all the upgrades. TFNN.com, educating investors.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Welcome back, folks. So let's go back and take a look at that S&P 500 out here while I make one small adjustment. Thank you for that, Z. So back to the S&P 500, and really to answer the question as best as I can, if we take a look at the S&P specifically, what you're going to see is Stevie's green line, which has not been anywhere near touched yet, is 2784.23. And what John was referring to is if you start doing the Chapman wave count from the 26, the low of the 26 out here yesterday, at least thus far, yesterday was wave number 7. I think we might have gotten into it on Friday, but that doesn't really matter. What we also got yesterday was that 9 count out here. So if today's high does not get taken out, you've got a confirmed 7th wave move, and really at this stage here, a confirmed Tom the Mark set up 9 count. Now, the beauty about having those two data points at yesterday's high is if there's going to be a move lower, which we don't know, let's say, what would cause that, those levels will hold. Likewise, and look, I can't give you a guarantee. Wish I could give you a guarantee. What I can give you is a guarantee of the best call. And the best call would be like this. If the high from yesterday gets taken out, doesn't have to be today. It'll be Wednesday, Thursday, Friday, whenever. And before price would close below Stevie's green line, 2784, the market's not going lower. It's going higher. And by higher, we just take a look. We took a look at the Dow, and that says going back to its all-time highs, probably beyond that. And it would be doing that between now and at least we could say May, but more likely sooner since it's really the end of February out here. So that's what I see when I take a look at the S&P 500. The other thing that I see is really understanding what is the underlying instruments behind the S&P 500 doing. And that really means you got to take a look at, or you don't have to, but take a look at the different sectors where could the sectors, where is the explosion, excuse me, to push markets lower. Well, here, and I take a look at the XLK, when we look for repeating patterns out here, you will see that coming, and this is a beauty, the XLK with regard to the setup 9 counts and with regard to waves 7 out here, but coming off of the low in June of 2018, all the way to its all-time high in October of 2018, wave number 7. It's the reason why John and the Tiger's Den is paying attention to it. Start counting from that high down to the low on the 24th of December inside of the XLK, wave number 7. Now we're there, wave number 7. So that's why I say, hey, it's a beautiful pattern. It should work. And if it doesn't work, that's a beautiful thing too, because it releases a bunch of information to us and it says, you know, if you were short, hey, we get all the reasons why, but now we have the reasons to say, well, why not? Or maybe not be, or maybe it's not the right spot. So I'd watch the XLK, and there are other Gs out there. In fact, the second weighted structure, weighted sector inside the S&P 500, that's the healthcare. That got up to wave number 7. But if we take a look at what its move has done today, come back just to a support level. Stevie's green line, 92.21 is the number out there. No 7th wave inside of XLF, but it does have that 9 count. Had that yesterday. Little shooting star, bears reversal candle. Price is still trading above Stevie's green line out here. If we close it below it, then you're looking at about 25.83. So those are the top 3 sectors that make up, I don't know, 20, 30, probably 40%, give or take, between 35 and 40% of the S&P. Yeah, probably. Yeah, I would think could be just slightly over 40% out there. So that's what I would be looking at. And yeah, Tuck, I understand that it's not the 786 of its highs out here, but if you're going to look at this chart and utilize just the tools that I use to call the market, and you saw these 7th wave moves, and then you saw the time to mark setup 9 count, would you really? You know, I would base it more on this than I would be based on whether it was a 618 or 786 retracement and so forth. Those, I consider those to be more guidelines versus these are actual patterns. You know what I mean? Really, these are patterns that have worked with inside of this ETF out here. So I think we can really say, okay, this is good. This is a good cheat sheet. What do they call those cheat sheets back in school when we had to read those books and everything? I forget those. So, but this is a really good cheat sheet to be able to provide you and I with the information as to what was going to likely occur out here. Okay, book for dummies. Now, that was the book, Tuck, that I got. There's another book out there that you remember that you just be able to go buy. That's Cliff Notes. Yeah, there you go, Jose. It was Cliff Notes out there. Hey, I don't know if I would have gotten through college without Cliff and his notes out there. So the next question that came in was, is there any reason that I can see to not be long silver? If we take a look at silver right now, and as John pointed out, this contract rolled over to May yesterday, I don't see anything right at the moment. It really depends upon the close. You've got a market profile. Now, maybe it does or maybe it doesn't. So I don't know how exact you want to get, but let's try to get very exact. The top of the box, resistance, where sellers are lined up is 15.914. We're trading at 15.925. So we're basically sitting right on this area. If price were to close below that, then what you could be looking at is a move down to the 1570 level. That would be the first place that you would take a look at. But do I have a reason to suggest that being long is wrong? No, because price is above support. Price is above support on a daily. Price is trading right at support on the 5-hour time frame chart. So now you've got 2 really great support levels to be eyeing. You've got a 30-minute profile that just formed, well, within the past couple of hours. The top of that box is 1590. So you're really in this 1588, 1590 area really should hold. If it doesn't hold, then we're headed lower. 1570, 1575 would be the number. Now we know where resistance is, so we're pretty good on that. It's up in the 1630 type area out here. But since you might be scalping, I don't know, when you're taking a look at the trade in silver, what you're what your thoughts are here. What you really want to see eventually over the course of the next couple hours is a new profile that forms that is above the prior profile. The low is above the prior low, the high above the prior high. I don't have any indication that one of those is going to form. If you go take a look at a shorter term time frame, such as 15 minutes out here, here at least you're beginning to see newer profiles form. You see what I mean? You know, for support and resistance. It says, okay, at least at this stage of the game, that buyers are trying to change the tone out here. So you've got support. You know where that's located at. And the parameters, I think, are pretty easy with regard to the decision-making process in being long silver. So I hope that helps you out there. Okay, cool. Good. Glad that you see that. So let's see here. Do we have any questions that have come in? Alex writes in. Alex says, hey, Steve, for a long-term holder with cash to invest, at what level would you add to positions in a pullback? Okay, so that's a great question. We're going to go to breakout there. And when we come back, we'll try to answer that with the data that we have today. But if we get a pullback, we're going to get new data too. But let's go with the data today for Alex Rodriguez. Steve Rhodes with TFNN. We'll be right back. We both know you've got what it takes to crush your goals with the will to make it happen. So why haven't you accomplished it yet? For most, the answer is fear. Fear is that limiting factor that stops us from getting what we truly want, but it doesn't have to. That's why on Wednesday, February 27th from 5 to 6 p.m., I'll be hosting my one-hour workshop, Overcoming Fear in 5 Easy Steps. Hi, I'm Steve Rhodes, the 2018 Market Timer of the Year, author of Mastering Probability, and an expert in human emotion. Subscribers to Mastering Probability gain free access to this extraordinary workshop where I'll coach you how to bust through your barriers of fear. How you respond to fear is what sets you apart from the rest of the crowd. Look, this could be the most valuable hour we ever spend together. So come to the homepage of TFNN.com and begin your 30-day risk-free trial of Mastering Probability and take the next step towards the life you deserve.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. Dow's off 7, S&P is basically flat out here. So let's take Alex's question Great question, and thanks for writing in and asking. But Alex's specific question is for a long-term holder. Long-term is key, and I should answer this question as a long-term holder with cash to invest. At what level would you add to positions in a pullback? So the first thing is we need to get a grasp, get our head wrapped around what kind of a market are we in, right? You're either in a bull market, a bear market, directionally speaking, or literally speaking, or you're in a market that moves sideways, or you're in sideways and you're kind of doing both. A lot to consume there. No, it's not. If we take a look at the Dow and we use the Dow as our index to base our decisions, that's what we're going to do, because that's what's up on the screen out here. On the left-hand panel of the screen, even though the word is written there, what type of market are we in and why? Now, this is a monthly time frame chart, and the answer is very simple. Because what we are in is we are in a consolidation pattern. So we're in a consolidation, Alex, and that means we've tried to bust out the lows. We've had intercession pushes down. We've tried to bust out the lows. In essence, we did because at the end of the year, December 31st, price had pushed its way right back up to the bottom of that consolidation. They're very, very close to it. So we're still in a consolidation. And until 26,616.71 gets taken out, and even if it does get taken out, I'm not sure that that's a real breakout. But let's just say, and we'll go take a look at what that other number-ish might be out here. The number to add would be a pullback to the bottom of the consolidation. That would be the ultimate outcome for the long-term investor out here. Now, the chart on the right is the Dow price in euros. Always good to understand what every instrument that you're trading, or especially when it comes to these large indices and the big dog out there, to understand how it's traded in all the major currencies out here. Because remember, if you're wondering, this is kind of an interesting, as long as we got this chart up here, this is kind of an interesting perspective. If you're wondering who was buying and who was selling going into December 24th, the bottom yellow line on the chart for the euro and the bottom yellow line on the chart for the Dow in U.S. dollars represents, well, in U.S. dollars represents the bottom of the consolidation, which in essence is the low from the trading month of November 2017. The breakout inside the Dow began at the low of October in 2017. And the pullback out here found support. You see, that was really the consolidation level inside of the Dow because of the test or the low in March of 2018 and in April of 2018. And that really set up its version of the consolidation. And price pulled right back to the bottom of that, and buying began. And in this case here, by the way, the buyers of the Dow in euros, and since this chart here goes back to 2009, so if you're over in Europe and your currency is euros, you have made much more on a percentage basis money by investing in the Dow than if you were inside the US dollar index out there. And that's really important to know. But the first answer to your question, Alex, is 23,377 or thereabouts. If we do bust above 26,616, and it'll be the Dow priced in euros that is likely the first one to break above its all-time high out here. And that's not even, we're not even talking about the all-time high in the Dow, because the all-time high in the Dow is actually 26,952. We're just rounding. But it's this little diagonal line from the high that formed in the Dow in January and the high in October. And that would really be kind of a channel line, trend line, where you'd want to see a break above that to say, okay, game over. We're headed to Stevie's 30,740 and beyond out there. The other spot to really be looking at is if we take that Dow chart and we go ahead and we convert it to a logarithmic scale out here. Really, it is the logarithmic trend line off of the March 2009 low. And then the next touch point I'm using is the January 2016 low out here, and see how price held this level. And in fact, the actual low for calendar 2019 has been that line. So that would be the other area that I would be looking at, which is going to be above the consolidation level. But it just depends on what month we might pull back there. So it's around 23.3 something, somewhere in that range, 20, which we got 23.377. So that it may be the number out there. So you asked about long term. That is long term, and I hope that answers your question out there. All right, let's go see if we've got any other questions that have come in. And the answer is behind door number 2. No, we don't. So no other questions. I guess I can just stay. Oh, I take that back. We got one right here from HSBC. Says, hi, Steve. Would like your thoughts long term. Here we go. Long term. Ticker. Long term. What's the ticker symbol? So you're saying on AVP, but I don't know what the ticker symbol, my thoughts long-term on. But let me take a look at what is AVP. Let's go take a look at A, B, and P out here and see what that is. Is that Avon Products again? Is that Avon? Yeah, it's Avon. Hey, how about that? So Avon Products, I know we looked at this last week. We got a couple minutes before we go to a break, so let me do this here. You see what's on. You're asking long term, and so for long term, I don't know what long term means, but here's what we're going to pay attention to on this chart. Here's what I think you should pay attention to. And for long term, we're going to go to the bullish side. This is the weekly time frame chart, so let me give you the bullish side. The bullish side was last week's move. And it was a move above resistance. It's the solid green line. That is the time to mark setup trend line. It's a horizontal line, so with regard to trend line. And that is the high of this little shooting star for the week of April 20th, 2018. Closing above that says, hey, we've got a change in character, change in tone, whatever it might be. And so far, the pullback this week has been a test of that level. Now, this week, on a weekly basis, looks like for Avon Products, it's going to be that time to mark setup 8 count. And therein lies something just simply to pay attention to, because it could be week 8, 9, or the week following 9, where you could see some kind of a high out there. So that's what the intermediate term time frame shows us. If we look at a monthly time frame, the monthly time frame, has issued a warning shot across the bow. That warning shot was price was moving higher, doing less relative energy, and in January, that pullback out here came and found support on a monthly basis. Stevie's red line, that's at 3 buckaroonies out here. If you were to see it close below that, then my thoughts would be that what Avon Products would be telling you is that it wants to pull back, and pull back to where? Well, here, if we go back to the where would probably be 2.25 to 235. But before it would do that, you would get down below 283 at the moment, which is the top of the daily profile out there. So for Avon Products, HS, I hope that's really just the instrument you were looking for. If you wanted something else, send me another email because I don't see it inside of this one. Long term looks good, but there are some warning signs out there. That's all. Warning, Will Robinson. Steve Rhodes with TFNN. Dow's off 22, S&P down 2.5. We'll be right back.
If you're in the CD market and looking for a secure investment, the Tiger First Mortgage Program may work for you. The security for these first mortgages are building lots in the Tax Opportunity Zone in St. Petersburg, Florida. The Tax Act of 2018 set up tax-free zones across the country where you can build and hold for 10 years and pay no tax on the profits, which makes these lots valuable. The investment is anywhere from $30,000 to $75,000. The interest paid is 7% yearly, paid on a monthly basis. According to Bankrate.com, the best rate for a 4-year CD in the country as of February 20th is 3.1%. A $50,000 investment at a normal 4-year CD rate of 3.1% would give you income of $1,550 per year or $6,200 over the 4-year period. That same $50,000 investment in the Tiger First Mortgage Program would give you $3,500 per year or $14,000 over the 4 years. Which would you prefer, $6,200 or $14,000 of interest on your investment? If you would like more information about the Tiger First Mortgage Program, you can call me at 877-518-9190. That's 877-518-9190.
If you haven't checked out the newsletters page of TFNN.com, what are you waiting for? All of the TFNN newsletters are informative, up-to-date, affordable, and a must-have for every trader looking to gain a competitive informational edge in today's markets. TFNN newsletters cover every aspect of the markets to offer you the very latest in market news. Plus, new subscribers get to test drive our newsletters risk-free for 30 days. From all aspects of the markets, including stocks, bonds, metals, commodities, and tech, there's a newsletter to fit your needs exclusively from TFNN. Stay informed each day you trade and get that competitive edge that will help you stay ahead of the game. Visit our newsletters page by going to TFNN.com and click the newsletters button near the top of the page. TFNN.com, educating investors.
Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Directions Daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Welcome back, folks. So JB writes in and asks if I would take a look at the New York Stock Exchange and give him my thoughts on that. So let's go do that. Good question. And so as we pull up the New York Stock Exchange, here what you're seeing, and I don't always use this, but I do specifically for this specific chart where I'm looking at a couple of different things. So what I mean by that is we're looking at lines here. So we're just looking at closing prices for the New York Stock Exchange. Just each day's close. It's a blue line. It's at the top panel of the screen out there. The center panel, you'll see the descriptor in the center there. It says Advanced Decline Oscillator. So that is looking at the difference between the 19 and 39-day exponential moving average of the advanced decline data. And then the very bottom panel is the spot volatility index, which right now is trading at 1491, and the 50-day exponential moving average is 1791. What you'll notice typically, again, not a guarantee all the time, the bearish formation here is when you have the advanced decline oscillator below zero. That's the red line, really dead center of my screen out here. That would be zero. And combined with the spot volatility index trading above the 50-day exponential moving average. Give you an example out here. If you take a look at the highs from back in October, what you'll notice kind of right where my crosshair is on October 4th, we had that advanced decline oscillator well below zero, and we had a close on a closing basis, the spot volatility index closed above its 50-day exponential moving average out there. And you can see that from that point forward and moving down into the lows of October, just a few days where the spot volatility index peaked below the 50-day. So that's kind of like the ultimate recipe for, hey, the market's going to move lower. You've got selling pressure. That's what the technical tools are providing with you. And to prove that point again, you just have to go back into the January timeframe of 2018 and see when the and here the other thing you're looking at in the advanced client oscillator reading, you're looking at these little green diagonal lines that show declining tops. They show declining tops in the face of rising price out there. That's a divergence that can lead to significant declines, but those significant declines are more likely to occur when you've got the setup with the 80 oscillator below zero, which right now it's above zero. It's at 1590 right now on my screen. And then the spot volatility index above the 50-day. And we're well away from that. We're $3 away from that. Percentage-wise, that's a pretty big percentage. That's a 25% move or so, something like that. So that's what I see when I take a look at the New York Stock Exchange. Reasons to be concerned, but at this stage, the way that the technicals are set up, they're saying that a pullback should be relatively minimum at this stage. Now, actually, that all makes sense with regard to the annual seasonal cycle. Annual seasonal cycle says we are in the most favorable seasonal cycle period of the year, which is typically the end of January through about May to July. Usually the real tops take place not at the 1st of May and you get the old sell in May thing, but typically around the middle of July, end of July, that move down into the October timeframe. Now, that's not to say that from the middle of October through December that it's not a good move. That's your second best seasonal time period out here for the market. So, JB, I hope that helps you out with regard to what Stevie sees when he's looking at the New York Stock Exchange. Right now, just a divergence. That's all. But nothing really significant. And of course, you know, we look at that spot volatility index and we say, you know, it's really, people talk to it, people use it as it's a fear gauge. You and I have never found a good meaning for how to trade that. Instead, that's why we use 50-day as an example. But speaking of fear, I'm going to help everybody overcome fear in 5 easy steps tomorrow. It's much more than that. It's going to be an amazing workshop and working my tail off just because that's what I do. You know, I say the way you do anything is the way you do everything. Hey, speaking of the way you do anything, take a look at these high-yield corporate bonds out here. They're not showing any sign of a liquidity issue. Liquidity issues, basically, this is how you can use that spot volatility index. So when it's trading above the 50-day, it says you've got some type of liquidity issue. And when high-yield income funds, there's more of them than just HYG, when they're trading lower and trading low in earnest, they tell you, hey, you got some liquidity problems. That's when you start to see the moves downside. So we're not seeing that just yet. And that kind of goes back to the question with regard to, in the S&P 500, what do you see that's going to spark the move lower? Well, we're not really seeing it from a liquidity measurement out there. Okay. JJ writes in and says, hey, Steve, could you take a look at Amazon mid-time frame 2 to 3 months? So let's go take a look at the amazing one, Amazon, see if we can get any kind of readout here for JJ. And if we're going to say 2 to 3 months out here, JJ, the most important thing that has occurred inside of Amazon at this stage is this week you got a brand new market profile. It is bullish in structure. Now, don't let that get your skirt in a tizzy, a good tizzy out there, because resistance at this stage is 1708. So here's a profile, in essence, with inside the prior profile out here, but it is bullish in structure. So we like that. We like that. Just simply doesn't mean that price has to go get to the top of the box, 1708.86. But what it does say is if price were to close below on a weekly basis below 1571.12, and you ask for like a 2 to 3 month window out here, that's what I would be watching. Now, what does that mean if price closes below that on a weekly basis, as long as this profile still is in place? It says nothing more bearish than a failed bullish pattern. That's what it would say. And then you would just simply target the prior swing point. Well, in the case of Amazon, that's, of course, going to be the December lows out here at the 1307 to 1513 area out here. So right this stage, been a kind of a sideways-ish movement for a couple of months out here. I'm not seeing anything to suggest it's different. We're at 1627 right now. It's not really a big move to get up to 1700. You're talking $75 in a $1,800, $1,700 instrument out there. So it looks like your range at this stage, 1708 at the highs, at 1571 at the low. If I look at the weekly, the monthly, I'm sorry, we just looked at the weekly, but the daily and the monthly out here, not a lot that I think is going to assist you. from understanding intermediate term what's going on. So I hope that helps you out. Thanks for writing in. That was JJ out there. Nothing else is on deck. So we got a free 1 minute to go look at whatever it is we want to look at. I don't know what that would be. I suppose gold. Oh, yeah, I suppose gold. You know, if we take a look at the gold out here and not look specifically at gold, but look at the XAU, it's kind of interesting. That says danger, Will and Bill and Joe and John Robinson out here. Because what today has done so far in the XAU has been a test of Stevie's green line, but it's a rejection. By rejection, what I mean is it needs to close back above 77.98. These are the minors. Otherwise, price is going to head lower. Now, head lower to where? Well, the first target, of course, is going to be the swing point from February 14th. That's right, that Valentine swing point in the XAU in the 73 to 74.5 range out here. And that's the message inside of the XAU on a daily basis. That changes if price closes back above Stevie's green line, 77.98. Steve Rhodes with TFNN. We'll be right back.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com. No matter what kind of trader you are, 2018 is a great time to try out a subscription to Tom O'Brien's Gold Report. Whether you just plan on diversifying your portfolio with some exposure to gold and gold mining equities, or you're a gold bull that sees 2018 as the year of commodities, now is a great time to sign up for the Gold Report. Tom O'Brien publishes his Gold Report every Monday morning before the market opens and covers a variety of topics including gold, silver, platinum, copper, the XAU and HUI, the dollar, bonds, South African rand, as well as more than 20 of the most actively traded mining equities. Start your 2018 off with a bang and sign up for the Gold Report today. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. For all the details and to start your subscription right now, visit the front page of TFNN.com and you'll find the Gold Report under Investment Newsletters. Nico DeHaan and Paige Clark have launched a special for a limited time only. Save 25% off Primal Edge and Health Signals. Just use promo code HEALTH for Health Signals or use promo code PRIMAL for Primal Edge and save 25% off instantly when you sign up. All the details are available on each order page at TFNN. Certified personal trainer Nico DeHaan's newsletter Health Signals comes out twice a month and is packed with great information on health, fitness, and diet. Primal Edge is specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox, and contains a special blend of ionic soil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form. This sale won't last long. Sign up now using promo code HEALTH for Health Signals or Primal for Primal Edge and save 25%. For all the details, visit the front page of TFNN.com right now.
This is David White. Stay tuned because coming up next is the Power Trading Hour right here on TFNN.
Welcome Welcome back, folks. So it looks like the last question going into the end of the show here is what do I see as the next expected move inside of Treasury bonds out here? And if we take a look at it, I really believe with regard to T-bonds, just like in gold especially, we need to understand what they are doing inside the other major currencies, the global flow of capital out there, what's going on in Euro land, Yen land, and Pound land out here. If we take a look at what's going on inside of U.S. dollar land, all I see out here is just basically a sideways-ish type move out here. If price takes out 147.01, that happens to be the high from the trading day of January 31st out here, then I say T-bonds head all the way back up to their highs from January 4th. But so far, this thing is held as a good level of resistance, 147.01. So it looks to me like we're going to see that test. That's a place where you could sell from, and with a tight stop. As well as you could trade it to the upside if you bust above that level. Are there any clues? So we don't see a break of any kind of a swing point. The swing point out here is January 18th for bonds priced in dollars out here. If we take a look at what's going on for bonds priced in euros, you're basically back to its highs out here from January 2nd. So we're just seeing a series of higher lows out here. So there's nothing bearish about bonds priced in euros. That says, hey, you know what? If you want to get your money out of euros because you're worried about what's going on over there, U.S. Treasuries are a good place to park it. Beautiful thing. If you take a look at what bonds are doing in yen, you're all the way back up to the highs out here. Is this a double-ish type top? Could be. Triple-ish type top? Could be out here. But you're not seeing any significant moves lower at this stage. You'd have to take out the lows from a couple days ago before you'd really get excited about that kind of a move. You're not seeing any selling here, right? Not really seeing selling in euros or in yen. Where you are seeing selling is inside of pound sterling. If bonds are going to move lower, who's the sellers? Well, right now it's been the folks in the UK. I would watch the low of January 28th for bonds priced in pound sterling to give you some type of signal as well. Right now, maybe right down at support. Folks, thanks so much for being here. Stay tuned. Your favorite polar bear, David White's up next. Tom O'Brien, 3 to 5. I'll be back with you on Wonderful Wednesday. Take care.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.